I know everybody has listened to CNBC where they say, the stock is down 19%, almost in bear market territory. Oh, all the way down. It hasn't been in a bear market, but suddenly when it reaches 20% below its high, it's suddenly in a bear market. I would think that anybody who was long from the highs would say, yeah, it's been in a bear market all this time. A bear market is not a function of price. It is a function of the energy of the market willing to take action. Now, if the stock plummets dramatically, that's not necessarily a bear market, because there's a lot of people willing to take action if there's a lot of volume. What a bear market is this consistent grind where just nobody wants to take a position either long or short. You can make money if people are hammering it short just as much as you can when people are buying long, because in order to take a profit, they got to cover. So you're going to have periods like in here where you got these sudden rebounds. Anybody who was short, they're taking profits and they're buying. So you jump in and you buy. But if nobody is interested in really doing anything with the stock, how are you supposed to make money? Now, obviously, you see all this volume right here, and you go, oh my God, lots of volume, so people must really be interested in it. Well, look at the price. The price is down to $2. You got the market makers just buying and selling, making like a penny here, a penny there. You can't really make a lot of money day to day as a retail trader if you're having to buy in the offer and sell in the bid. There was a brief time when you had the island market where you could actually go in there and play market maker, but they shut that down pretty quick. Now, if you want to hold it for an extended period of time, like here's the low of 2009, that would have been a great time to buy because everything's going up. Suddenly everybody's interested in getting back into the market. All this time, nobody wanted to buy any stocks. Even if you're short, sometimes you got screwed because, the market makers, they're always going to have the edge. But if you bought in right here and you held it for, a couple of years, year and a half, you're going to make some money. But in general, this is a bear market. Now, we can roll it forward a little bit. And you can see right here, there's a fundamental change. How you had this is on a monthly right here. So on a monthly basis, it's crossed above that 50-month moving average. And it starts tapping that 200-month moving average. And it keeps going higher. Now this is where it turns into a bull market. Because suddenly people are waking up. So you can actually make money day to day. You got a general trend in the market. You got a lot of energy. Participants are willing to get in there day to day and make it happen. Now, obviously, you would have had to be pretty nimble here if you wanted to make money day to day. But if you just held, you could ride that wave. And what happens? I'm going to get in later videos into how these things function. But a lot of people are not familiar with the significance of these moving averages. They function. You have the band right here. These are Bollinger Bands, which is typically it's plus or minus 2 standard deviations, which is huge. So if you were to narrow that, and I'm going to show you the formulas later in later videos, you get this band where the price action almost always respects it on every time frame. Now what we're talking about is advanced micro devices. It was like nobody wanted to be in it for years. And suddenly, it became a hot stock. You could have determined that simply by looking at the bands right here and how the stock respects those moving averages in the bands. In later videos, I'm going to get into that. Okay, I'm new. in presenting this, but I've been in the business for a long time. I have a lot of knowledge to share, and I'm going to show you the secrets.